This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the data sets, the earnings, the SPY technical analysis, and briefly discussing TLT slash the SOFR rates and going over what's going on with the yields. Tonight will be a shorter video. I'm still feeling pretty bad. Uh, this new treatment has been causing me to have pretty intense headaches, and yeah, it's going to be a little bit difficult to start. With that said, happy birthday, Silverliner. I know you mentioned that in your Weeple comment, so I had to say it. Um, Other than that, let's get into the data. And getting into the data, so we did see a little bit of the data sets come out. I was not sure if we were actually going to see this ISM data, but we did, and it came in a lot cooler than anticipated. Um, don't really have too much to say about that. We kind of expected PMI to come in a little softer. The S&P Global Manufacturing PMI came in basically the same, so no changes there. Now tomorrow, we should see the export and import data. I'd be surprised if we don't see that. We also have Fed member Bowman speaking at 6:35 a.m. So exports and imports will be at 8:30 a.m. and the trade balance. So all that will be in the pre-market. I don't really anticipate the exports or imports looking very good. Everything I've been hearing about has been suggesting that we will see downside in both of those. So we will see whether that data is actually posted or not. Now at 10 a.m., uh, I'm not sure if this data will be posted as we do have the government shutdown going on, but we do have the factory orders month over month, and we do have the JOLTS job openings for September. That's going to be a very large data set if we do get it, but I am very skeptical on that. But if we do get it, the 10 a.m. time slot will be very, 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 very key for the market, as that's one of the first data sets for uh, labor market we've really had in almost a month now. With that said, for the data, there really isn't a whole lot of exciting stuff going on this week. Now, for Wednesday, we have the non-manufacturing side of the ISM data. It should follow somewhat in tandem, so we should be seeing a lot of these, even though they're forecasted to be basically the same or higher, we should see those pulling downward in line with somewhat that we saw the manufacturing PMI. Um, Not really worried about the composite PMI, global services PMI. Global services PMI, I do expect that to come down as well, even though the service industry has been doing very well. I'm not sure if we'll see the ADP non-farm on Wednesday. That'd be very, very, very important for the market if we do. Basically, I'm saying I'm not sure what to expect from the data sets until this government shutdown ends. Now, the poly market has been anticipating that the shutdown will end around November 16th. So unless there's a deal really struck before that, I would basically put my bets on that. And the reason why is because a lot of these side markets that hone in onto this type of stuff usually will have some sort of insiders, or they just have extreme knowledge in some form or another. So generally the market is going to try to aim to bet in the correct direction. So with that said, I would be looking towards that uh, November 16th timeframe. And again, each week that the government shutdown continues is roughly 15 billion GDP, or 15 billion removed from the GDP. And so far, this shutdown has been going on for, I believe, 4 weeks now. Um, if this goes on until the 16th, this will absolutely have been the longest government shutdown. And that will mean that a lot of government workers and many people that need funds and everything will not have received their funds for roughly a month and a half. So that's not a good thing. Um, Other than that, again, some of this labor market data will be very, very, very key if we actually get it, but I'm skeptical of what we're going to see or not. Some of these data sets will say that they're going to be reporting and then they're changed at the last second. Um, so unless I see it really on pen and paper, kind of like when the Fed redid the or the BLS or whoever released the CPI report when they changed the CPI release date, they actually posted about it, saying that it'd be the 24th. So, yeah, if we're going to see changes in the data reporting, it'd be nice to actually have a time frame on them. But yeah, other than that, let's go ahead and discuss tomorrow's earnings. And getting into the earnings, we did have Palantir today, and even though I believe the CEO was, overall projecting pretty good earnings, and I believe they had a beat in their EPS. Um, the markets is still selling off for some reason. I didn't listen to the call or anything. Again, I had no position there. I do know that's a good company to buy the dip on. Um, you know, you don't go against Palantir. Anyway, with that said, tomorrow we have some fairly important earnings, mainly the Shopify and the pre-market. That's going to be very important for hearing the guidance from the, hearing about what they're anticipating from consumers for, the next few quarters is very, very key. Especially as, we're starting to move into quarter four. Very huge deal. And we also have AMD in the after hours. Um, I heard they're gonna do bad, but again, that's just entirely speculation. For all we know, AMD can be pulling some massive multi-billion dollar deal, and um, yeah, AMD is basically a mini Nvidia. Um, Not really a great company to bet against, because this is the type of company where they will surprise you in earnings one of these times. So, yeah, that's kind of my opinion on AMD. I haven't checked the chart or anything else. It might be a really great time to short it. I have no clue. Um, Other than that though, AMD absolutely has the ability to move the market. Again, they are a mini, excuse me, mini Nvidia. Um, so they absolutely can secure some huge deal or project something that can absolutely shift weight into the tech market and cause it to push the market much, much, much higher. So never really count out some of these semiconductor companies like TSM, AMD, Nvidia. They absolutely have the ability to, um, pull some surprises. Now, with that said, um, besides those two earnings, really for the rest of the week, we're waiting for, some of these other tech earnings like Qualcomm. I don't really care about IonQ too much, but ARM, that's going to be a big one. But overall, the main earning this week was really AMD. Now, for me personally, I'm still very interested in Shopify and McDonald's just because I want to hear their guidance on, how consumers are doing. So, not so much on because I want a position, um, but more so just I want to know how they see the overall American consumer doing right now. So, yeah, that's the earnings. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. thank you for supporting me to help you build skills for a lifetime. And getting into the technical analysis, we will make this fairly quick tonight. Um, so last night we discussed how in today's session, on Monday the 3rd, that the 5 mile was going to be a very, very, very key level. Either the market was essentially going to buy up from that 5 mile level or reject it to the downside, and so far we're starting to see that rejection. Um, Now with that rejection, the anticipation should be that we are going to be looking to head towards both the 10 mile and the 20 mile. But we do have AMD earnings tomorrow. We do have ARM and some other ones on Wednesday. Not that I really anticipate any of the Wednesday earnings to pull the market up, but AMD definitely can reverse the trend in this. I know that potentially we do have some labor market data this week, so that can also potentially reverse the trend. But with this 5 mile rejection, I would take that as the market tested the 5 mile. Today we saw all the way from the 685, almost the 686 range, all the way down to the 679 and 94. That pretty much perfectly tests the 5 mile and rejects it. So if we see continuation from this rejection, then I would absolutely be looking at that 20 mile range. And currently the 20 mile is at the 672.31. So that's pretty much right at the bottom of our major consolidation channel, or at the top, should I say, of our major consolidation channel. And I'm going to turn off the Bollingers and moving averages for a moment. Um, Yeah, so what we should be really anticipating here is that, in last night's video, we talked about with this arrow, either we were going to head down or head up from this level. That's really what the 5 mod does, is it tells you that we're going to continue upward from to the upper Bollinger or down to the 20 mod if we're above the 20 mod and the 5 mod is above the 20 mod. Okay. Um, Again, so far we are seeing the rejection. And that rejection should anticipate that we are going to see all the way down to the 20 mall. Now, the upper side of this major consolidation channel is around the 673.77. The 20 mall, I believe, is around the 673. It might be the 672.70-ish range, but close enough. Those few cents really won't matter in the grand scheme of things. But with that said, um, if we head down to that range, I would be looking towards this area as a major support. Okay, because one, this is the top of a major consolidation channel that we broke out of. This took quite a long time to get to this point. So it'd be weird to pull above this channel just to drop back into it. Not that that can't happen. I've seen that happen before, but it would be weird. It's just not standard price action. The standard price action from here would be to drop down to the top of that channel, build some support, seeing how we're also towards the bottom of that major buying channel. There's, even more reasons to build further support in that range, with the 20 mod being there as well, with us just having that 20 mod test not even, what, 3 weeks ago. A lot of things are saying that this should be a 20 mod test into a basically moving back up again. Now, I do know that there is some issues going on with the overnight lending, and I am going to discuss that here in just a few minutes, but um yeah, really the anticipation should be that we will pull down to the 20 mall. Currently the 5 mall is at the 683.94. That will be opening basically around that 683.60 range. I think I wrote down 683.70 on the chart on your side, but we should be expecting that 683 70 open on the 5 mall. Now, with the overnight action, pulling the market down quite a bit. Currently, the overnight price is at 679.94. So that does mean that the 5 mile can pull down pretty aggressive. Um, we can see a 5 mile all the way at the 681 range. So just be really mindful of where that 5 mile is because um while it starts pulling down towards the 20 mile, it can also turn into a major support pretty much at any time. All the market has to do is just retest that level and bounce, and then, we can clear all that selling and, you know, head back up to all-time highs pretty much at any point. So that's really the overall thesis right now is that we have two major channels to kind of break through if things are going to get very, very bearish here. That's why I'm not so bearish here, even though there's a lot of selling going on. There are some conditions that can really spell major major trouble for tech, but we do have to see some of these channels really broken through first before we can even really start thinking major bearish. Um, Going over the 4 hour time frame, now we are seeing a lot of this just filling these downward gaps. Um, I did discuss this in last night's video how we are looking for the inverse cup, the inverse handle, and from this inverse handle, which is actually just a large inverse cup, right? We're going to just delete that one. It's a little easier to see. And from that cup, we did get the handle to the downside. Now, from here, the real anticipation should be that we are going to clear the gap. We are going to basically finish out this move towards the 20 mile and have that real support start building at that 20 mile range, where the upper consolidation channel is. If we don't see the 20 mile really build support upon, then you have to really remember that consolidation channels like to trade from all the way to the top of the channel towards the bottom. And that's just how any consolidation channel works. So if we break down into this major consolidation channel, if we don't build support at the 20 mile to head back upward, then we are going to see some major downside. Now, using the lower Bollinger, I believe it's at 653. Yeah, 653. And if you see exactly where the channel is right now, or the consolidation channel, that puts the lower Bollinger right at the bottom of that major consolidation channel. So the move is starting to open up here if things are going to get bearish. But again, you do have to wait for a little more continuation before you really um, you know, full on start shorting this for major, 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 um, support testing essentially. There are a lot of gaps to close on the downside, but again, with us having that major 20 mod test there, that is all the liquidity the market needs for essentially a month, month and a half. Um, that last 20 mod test was back on the 10th. So, I mean, it would be about a week early if we do have the move down to the 20 mile this week. Um, but it can happen. We have seen that happen sometimes. And where the moving averages are, sorry, I'm just trying to look through this very quickly. Where we have the moving averages, we should see within 2 sessions, depending if we see continuation within the selling, that the 5 mile will be crossing back down over the 10 mile, which again, that is the first bearish signal that you should be looking for. And if we continue selling all the way to the 20 mile, and if we hold that level by Friday, then we should see the 5 mile pull down to the 20 mile, which again, that would be starting to show the second major bearish signal. So if this is going to form a this major head and shoulders like we've been discussing, then that's what you're looking for. You're looking for continuation within the selling and breaking down into that consolidation channel and actually breaking below this major buying channel. That would be a huge signal to suggest that we will be moving down to the lower Bollinger. Now, the thing about this last selling move is that it got very close to the lower Bollinger, but it did not actually pull down the lower Bollinger. So we have not had a lower Bollinger move since April, if I remember correctly. Yeah, since April. Um, Generally the lower Bollinger is tested about every 6 months. So we are starting to line up right for that time frame. It's actually a little closer to 7 months now. So that didn't count as the lower Bollinger move. The lower Bollinger is really starting to line up to be tested again. So again, if this channel is broken into, that really sets it up to be tested to the downside. But overall, I'm not really bearish on this yet until we break through these channels. Um, the market has just been extremely, extremely, extremely bullish, and I think you can't really discount that anymore. I think that market kind of has every reason to continue pushing upward. If we're going to see, potentially good earnings from AMD, some of this labor market data coming in bad could potentially push the market upward, as that would, essentially be pricing in deeper rate cuts. So just keep all that in mind. It's very, very difficult to navigate waters when the data is just not there. Okay, and we really haven't been seeing a lot of data. Until we see more of this labor market data, I'd be very, very, very cautionary here. If we get to that 20 mile range though, absolutely use that to set up straddles. Again, every time you get to the 20 mile, you should be setting up straddles for about 1 to 3 months out. Last 20 mile move, all of us that set up straddles there, we got the entire move from the 650 something range all the way up towards the 690 range. So just keep that in mind that if we're going to go down to the 20 mile, that could be a major buying opportunity. It doesn't always have to mean that it's going to be spelling doom for the market. So that's the SPY. I do want to go over TLT and everything. All right, so here's kind of what I think is really going on with TLT, the treasuries, the long yields and everything. Everybody's been really watching, pull up 30-year. Um, everybody's really been watching the long bonds and the long yields slide and thinking it's some sort of, I don't want to call it an inflation story or even a reinflation story, but a lot of people are kind of buying into the thesis that inflation is returning. We've been hearing the Fed say that. We've been hearing speculators discussing it. It's been an ongoing thing that, potentially inflation's coming back. And, I highly disagree with this. I know that's not the case with everybody, but we have been seeing, again, the yields rising from the short end of the curve, which have been really rising very, very quickly, to the medium end of the curve, which is the 10-year, and then the long end of the curve, which is pulling up slower. So I kind of want you to look at this in terms of a stair-step progression. The short end is pulling up very, very quickly. The medium is pulling up quickly, but not as quickly. And then you see the long end pulling up quickly, but again, not as quickly as the medium yields. So we have the SOFR rates, and that's the overnight repo rates. Let me just go back to TLT for a moment. And I want to actually pull this up on the camera So let's see. So let's go ahead and get this pulled up on here. Um, anyway, while I'm pulling this up, so the SOFR rate is the overnight repo rate for the Fed, and currently, let's see, pull up. There we go. Okay, so this is going to better tell the story. Okay, when we had the rate cut, and we had the rate cut happen, just last week, and that was a 25 basis point cut. That means that the current level of the federal fund rates is 3.75 to 4%. Okay, that's great. I've been a strong, you know, believer in that the yields need to be cut. You know, with that said, when we see the overnight SOFR rates pushing higher than the federal fund rates, that means that people need money, in a major way. Uh, and what this is correlating here is we see this major push. This is showing that push above the effective federal funds rate. Anything above this 4% right now is really bad. Okay. With that said, over the last few sessions, we have seen the federal funds going, pretty much parabolic in the overnight repo lending. And a lot of people will kind of correlate the overnight repo to QE, but it is different as QE is expanding the sorry, my wife is vacuuming and it's diverting my attention. Um, the repo is not the same as QE, as the repo has to be repaid. QE actually just fully expands the balance sheet of whoever they're, providing that QE to. So when we see the overnight repo, um, seeing massive, basically necessities of taking liquidity, that's showing that people need liquidity outside of what the Fed can even fund. Okay. And this is again the 1 month chart. So just as of October 31st, we had um it was it was almost what was it? It was close to 51 billion in collateral that was needed for that day. Today we had close to, let's see, 20 something billion. I'm not going to add that up right now, but I want to say it was close to 22 billion. Um, this is a concern. If this continues going on, this is going to continue pressing the yields upward. And the reason why this presses the yields upward, and that means all of these yields that I just showed you, the 1 year, the 10-year, the 30-year, is because the people that are needing this collateral are actively having to sell their treasuries. So that means they're having to sell the 30-year treasuries, they're having to sell their 10-year notes, they're having to sell their 1-year notes. They're having to get liquidity and collateral from sources that they have. And this is a way of de-risking. Okay, so even though it creates a very short-term upside in treasuries, this isn't the same as upside where we're seeing inflation picking back up. This is people having to close positions. This is people having to take additional liquidity, or I mean collateral from positions that they have. Now, eventually this collateral ordeal will solve, and this is a lot like the 2024 um uh hold on, let me pull up the chart. This is kind of like the 2024 um, yen carry ordeal when the yields spiked very high. Okay, let me pull up the exact time frame. I don't mean spiked high, they pulled down very, very aggressively. Okay, and they were spiking up very, very slightly in here, but once that ordeal started to solve, they came down massively. And again, this is when they started the rate cut cycle, and that's when we started seeing the yields pull upward. And we've discussed why that happens in previous videos, but within this current cycle, okay, that is why we're seeing a lot of this short-term pressure against TLT. Um, People are actively having to sell their bonds to get collateral, and we're seeing that through the DXY as well. The DXY is moving upward. We have been discussing this, and this is saying people need dollars, people need collateral. Okay, we've been seeing a lot of liquidations throughout the market, through Bitcoin, minor ones through tech. We've been seeing precious metals. We had that major sell-off with gold and silver. So we're seeing collateral being needed constantly. And now we're seeing pretty much one of the last echelons of ways for people to get collateral, which is, again, it's that federal I did not show the chart this entire time. Hold on. So where's okay, looking at the DXY chart, we do see it pulling upward, and I even discussed in last night's video how very, very likely we are going to see this pull above that 100 range again. This is telling you exactly what is going on right now is that people need dollar collateral. Okay, that is why the dollar is going up. The dollar is going up because people need more of it. People are buying the dollar. Okay. We've been seeing, you know, Bitcoin selling off, and it's actually starting to challenge that channel a little bit. Interesting. We're seeing Bitcoin selling off. We had gold sell off really majorly, not too long ago. We're seeing HIG starting to sell off pretty aggressively. Again, there was a thesis from multiple Weeblers that were saying that this was basically going to go up to the 82 range and continue upward. HIG has been showing constant stress. Okay, the ADL has been pressured. We've been seeing constant selling pressure within the HIG, and selling within the HIG means one thing is that equities will sell. Okay, not that I'm trying to be bearish on the market, it's just that's kind of what they do. This is, a risk asset based around the equities, even though it's based around the corporate debt. But, again, that ties into equities. So really all of this is just pressure because QT is ending on December 3rd or December 1st, whenever it is. I think it's December 3rd. Um, Sorry, I'm trying to pull back up TLT chart, but I'm blind. So this is just all temporary pressure um within people having to essentially deleverage um positions, close positions, get into dollar positions, and eventually this is going to turn into a major buy the dip opportunity. Um for me it's already been at that point, but I just want to show you guys the chart from when that blow up happened in uh August of 2024. We had TLT go essentially all the way from, this. Let's see, hold on. That blow up really happened. Um, that's 2023. Looking at the wrong year, I was like, wait a second, that's not right. Yeah, this is when it happened. I was like, I remember it pulled up quite a bit. Um, yeah, so when that event occurred, yeah, it's right here, 7/25/24. We saw TLT move all the way from the 87.81 all the way up to the 96.80 or 68. Okay. Now, it was actually higher than that. It was a lot closer than 99, but with all the dividends, it does, take away from the top price. So it was a lot closer to that 99 range because I remember taking positions right up to it and shorting all the way down right back towards this major trend line, even though people say I don't know what I'm talking about with treasuries. Um, Essentially, I'm really looking for this cup and handle to finish out. This should be a major buy the dip opportunity for people. This is just, it looks like inflation is creeping back up when in reality it's people having to panic close positions for collateral. And this panic closing of positions turns into the yields pulling down massively, massively pulling the yields down. Um, yeah, I didn't get to discuss this as well as I wanted to, but really that's what's going on with the SOFR rates and everything right now is that people are having to get collateral. Um, they're pulling collateral from pretty much everything, and that's why I've really been saying pretty much the last 2 weeks now, 2.5 weeks now that we've been seeing the DXY really winning a majority of the market days because we'll see the whole market, and I mean the whole market, Bitcoin, treasuries, precious metals, all just in the red while the dollar is just flying. And really, this is what's going on: is someone needs collateral. So until this really blows up, uh, this is a great opportunity to buy the dip on TLT. We should not see this be dipping too much lower at all. Um, Going back to TLT's daily chart and doing actual technical analysis, is that at the very, very worst here, we have our lower Bollinger. Okay. Um, Even with that lower Bollinger, we have the 50 mile, and we also have, again, the 5 mile, the 10 mile, the 20 mile, all above us. Okay, we have a ton of support to retest before we really start heading down further. So I'm not bearish here. Uh, if you're going to short, it was that upper Bollinger, day two. Really that was the move to short into. Uh, we also had the rejection of this micro cup. That would have also been the opportunity to short, but this is not the range to short into. At the very worst here, we're going to start building liquidity within a right shoulder. If we're going to see TLT really sink, they're going to build liquidity in there and pull it down. Okay. I don't expect that. I don't anticipate that. There was also another poster who said that we have been within a major selling channel and within a major resistance range. And I disagree with that. We broke through the major selling channel, uh, you know, a few weeks or a few months ago, basically a month and a half ago, 2 months ago. This was a major multi-year selling channel. Okay, it wasn't just a short-term thing, it was a multi-year selling channel. And we broke out of that. Um, that's super bullish to me. This 92 range, we fully anticipated a rejection there. Um, this should be seen as a bullish rejection, as we do have this major cup formed. Now that we have the cup entirely formed, we had the bearish structure at the top with that double top there. Now we're starting to look for the bullish structure. Sorry if you can hear my daughter screaming right now. She's playing with my wife. I'm looking for essentially this cup to close all the way back up to the 92 very, very, very soon here. We had the TLT dividends hit, which means that the dividend gets subtracted from the price. It always looks like a red day for, 90% of dividends out there. Doesn't really matter what the stock is. Dividend days always subtract from the price itself. Okay, that's how they pay the dividend. Um, so yeah, I see a lot of reasons to be very, very bullish here. We're also at the bottom of this major consolidation channel. Um, Again, major consolidation channel usually trades from the top to the bottom to the top to the bottom. So my full anticipation here is that we will trade back up to the top, along with all the other different factors I've discussed with, the labor market starting to really deteriorate, with this SOFR ordeal going on. There's a lot of different reasons why TLT can really start to skyrocket. And I'm really not one to believe in this proponent that inflation is kicking back up. Uh, Everything that I've been seeing, the CPI reports, the PPI reports, the PMI reports, everything has been telling us that things are cooling down. Um, a lot of these major retailers and everybody are guiding downward, saying that consumers are weakening very heavily. So I'm not seeing where this inflation is coming from. I don't see it. So that's tonight's technical analysis. Very bullish on TLT and Treasuries overall. I do think that we're going to very soon here tag that 97 range. I'd be very, very surprised if that doesn't occur. Um, with the SPY, I'm not bullish. I was bullish yesterday, but with that 5 mile rejection, that really, really changes the story here. That changes from us pushing back into the upper Bollinger to now we're starting to head back to the 20 mile again. Very, very different direction and where we could have gone. So that's the technical analysis. That's the, I don't know, narrative that I'm seeing overall in the market currently. So thank you all for watching as always. I hope everyone has a great day, great night, great whenever you're watching this. Um, Trade safe tomorrow, trade safe throughout this government shutdown. It should still be occurring for quite a while, unfortunately. Um, but yeah, thank you for watching. Take care, everybody. And yeah, I'll see you in tomorrow's video.